As always, you're alive and blessed. Welcome to How to Trade Market Structure on a bearish market. But like always, we catch in the bullish market and the bearish market. We don't really mind. Guys, why is this pretty? Why is market structure so important to know? Because guys, it provides us with an overall roadmap of price movement. It helps us to identify key structure and resistance, guys. So the first thing you guys really want to do, we use in two time frame. We use the 4 hour time frame, and we will use the 1 minute or the 5 minute time frame. Guys, the first thing you guys want to do, like I said, always go on the 4 hour time frame to understand the overall structure. Use the 4 hour to understand the overall flow of the market. On the 4 hour time frame, the only key component you need to draw up on the 4 hour time frame will be the supply and will be the demand. If you guys want to trade the 4 hour time frame, I would not advise you, but this is for the long-term investor. This is not the quick money, right? This is for the set and forget. So how do you guys trade this? Basically on the 4 hour time frame, because you guys know each one of these candlesticks will represent a 4 hour time frame. So how do you really want to trade on the 4 hour time frame? Trade a market structure on a bearish, because price is going to always mitigate the supply zone, or it's going to mitigate the demand zone. So you guys know the reason why I didn't draw up my breakout structure and the market shift on my 4 hour time frame, because like I said, the 4 hour time frame mainly for long-term investors. So what a long-term investor want to do when they go on the 4 hour chart and they see, okay, price respected the supply zone and didn't break past it with the one candlestick, it respected the supply zone. So what as a long investors would do after seeing this, now they will come right here, they would take this short. This would be the easiest, quickest trade a person would ever take in their life. They would set this right here, because they would say, all right, Butter said that price didn't break past the supply zone, so I'm going to enter the trade, which he's correct, as he proven before. As long as the candlestick did not break, that one candlestick did not poke his head out and even come above here, that means we're fine. If it even peak, that means price is still going up. It's going to come back down and continue going down. But as long as price stay in the supply zone, I'm going to listen to Butters. I'm going to come into the trade and put my stop loss right above it, because if it peak over there, that means it's gonna come back down and then continue going back down. And then you guys will set this trade here, and you guys will come back to this trade maybe in how long? Maybe in 3-4 days by now, because like I said, this is the 4 hour time frame and one candlestick representing 4 hours. So this trade right here will go on to a couple of days. But like I said, this is for the 4 hours. This is for the long-term investors who want to hold it for 2-3-4 days, which is fine. Whatever preference you want, that is how you would trade the market structure, just using the 4 hour time frame. That's pretty much all you would need, the 4 hour time frame, to identify that. Now for all of my scalpers, my quick in and out trade guys, it would be the same principle. But matter of fact, I hope guys, please screenshot these patterns, please, because this is the exact pattern you guys will see on the chart. Because on the 4 hours, each candle represent one candlestick, so that's why it look more simple here. But when you go down to a smaller time frame, you're like, oh my god, what is this? Relax, relax, breathe, take a deep breath. Remember what Butters taught y'all. He said, first thing you need to do after you identify the 4 hour, you go to the 5 minutes, or you can go to the 15 minutes to get extra confirmation. But that is all. We don't know that. We learned that. We come to the 5 minute time frame, and we're gonna draw up our demand zone. We have our extreme supply zone here and our regular supply zone. Like you see previously when I told you guys, if price was gonna disrespect this, it would have continued going up. In this scenario, see how it disrespected it here? It disrespected it here, and eventually it's gonna go back up to form a higher high and higher high. If price was gonna respect this, it would have come and had a breakout structure here. So remember guys, on top of every swing high, we have liquidity. On the bottom of every market shift, price is going to always retrace. Just remember guys, imprint these two concepts in your guys' head. Market shift, swing highs, swing low, and breakout structure. Price is going to always retrace. So what you guys want to do, you guys would have normally entered here, right? Which is fine. You guys would enter here for the trade. If, guys, there's a big if in this situation now. If price did not break past this support zone here with that one candlestick, then you guys would have come here and you guys would have take the long to the next demand zone. As a scalper, here would have been the next demand zone, and as an intraday trader, hold it for like maybe a couple more hours, your take profit would have been here. But notice how price break past this. So from price break past this, you guys would be like, yep, but I say when price break past this, it's going to continue going back up. So you guys see price came to the extreme demand zone, sweep the liquidity, and eventually price came back down in this direction. And as a quick scalper, you guys can trade both. Like we always trade both. You know me, we taking profit where profit is, guys. So we know when price had a breakout structure here, like price is gonna always come back. So we would have hit this demand zone on the bottom here, and we would have just take our trade hit. But remember now, the previous candlestick must close above the previous low. If it don't, that means a no go. So wait till the previous candlestick have a pullback, but did not close above the previous low. And then guys, even though this is a bear market, guess what? We still make a quick ass trade leading to the breakout structure right there. Even on a bull market, even on a bear market, we were still able to catch a quick in and out scalping, guys. Just so that, guys, you can't really complain. As always, hope these videos find you guys helpful, impactful, and as always, stay blessed and mind your business.